professional traders. So first thing I want to speak about how to control your urge to trade or not to trade in a never stopping, a never ending market. Now, this is what I have, something that I want you guys to write some notes down today because I think some things going to resonate with you. Myself, I've put guidelines in when I will trade and when I will not trade. One, I need volume in the market. I need some volume, action, moving up and down rapidly. That's one thing. I only trade at certain periods of the day. I only trade within certain periods of the hour, any time period that I'm trading in. I trade the morning session, then I'll take a break mid-morning, then I'll come back in the evening session and I'll trade again. Now, if you know me, you know my motto, what I say. 3 simple things for anyone that's looking to trade, and if you trade with this pattern, I think you'll be successful. So I call this TLP. That stands for time, level, and price. I use that acronym that I created, as coined by Kelvin, to keep me focused on when is the best opportunity for me to take a trade, to put on a trade. Now, I always have the urge to trade. I see a candle moving real fast, like, oh, it's moving, let me get in. But I say, hold on, Kelvin, nope, don't do it. Why? It's not, check the time. Where's the level? Where's the price? And then I can make a conscious decision whether or not to get in and out of the trade. That right there, guys, I'm telling you, it has helped me so much in my trading just to remember I need 3 elements present before I ever can put on a trade. So when you're putting on your trade, just make sure you have to ask yourself the questions before you put in a trade. So the first one here is you must have a trading plan before you enter the trade. What does that mean, Coach Kelvin? That means that before I ever decide to push the button to execute, to get into a trade, I have to have a plan in place. That means I have to look at the market, assess what the market is telling me, and then have a strategy in place before I enter the trade. Do you know that most traders, especially beginner traders or novice traders, they will get in the trade and don't know what they're doing, when they're going to get in, when they're going to get out, what's going to cause them to make decisions, and they'll just take the trade and just go Hail Mary. Well, that's one of the most dangerous things you can do. So I say have a trading plan. What is that, Kelvin? When I enter the trade, I know what signal I'm looking for to get in the trade, and then we're going to go into TLP. I also have an exit strategy where I'm going to take profit, and I have a stop strategy, an emergency exit if the trade goes horribly wrong, how to get me out of the trade, and that's called my just-in-case insurance. That's my protective stop measures. So you must plan your trade. That's planning your trade. So I have them things present before I ever get in the trade. I know exactly what I'm expecting to happen, but I don't know what's going to happen because you know how we say it around here, 50-50, 50-50 up, 50-50 down. Don't really know what it's going to do. But with these things present, I can make an intelligent decision, an objective decision to get into the market or not get into the market. That means take a trade or not taking a trade. So ask yourself these 3 simple questions. Here it is. What is the time? What's the time? You know how I say it. What's the time? What's the level? Where's the price? Is it currently traded in that level? Is it currently traded in that time frame where I want to see it? And them 3 things are present, time, level, price. I can make an intelligent decision whether I want to take the risk of getting in that trade or not. So here it is, guys. I only trade at the top and bottom of the hour. I trade 30-minute candles. Now I use lower time frame candles to make my decision for execution because I want to be close to the trade when I'm ready to push the button and the momentum to pull me into the trade, whether it's going long or short. So if the time is lined up, because I found out in my trading career that most major moves around the top and the bottom of the hour. I stumbled on that just doing my research, and I realized that if I trade along the top and bottom of the hour, I'm actually trading with the market, with most these, market makers or institutions are trading, because I've seen that I would get a better trade than trading a 5, 2, or 3 minute candle. I can get a bigger trade, and here it is. I found out when I was trading options, that when I trade a 5 or 10 minute candle or a 3 minute candle, I would average a 10 to 15% move. But when I started trading 30-minute candles, I was averaging 30 to 50% moves. My profit margin went way up. And I said, wow. And I didn't know why, because I hadn't figured it out yet. But I realized that the 30-minute time frame carries much more weight than a 5-minute time frame. So when a 30-minute candle breaks the high or low of a previous candle, it gives me much more momentum, much more intentional force to move in the direction I desire to go in, and I actually make more money. So I said, whoa, I got a thing here. So I'm only going to trade 30-minute candles. I'm only going to trade top of the bottom of the hour. Okay, then I realized that just trading a 30-minute candle wasn't just enough. I needed to have a level that 30-minute candle is breaking through, guys. Coming up to, or bouncing off of, or getting rejected from,
to come back and say, I'm stopped out.
Even a better opportunity,
so your 50-minute micro
a more
worked, huh?
higher probability to make money. So that means that when the time changes and the level lines up, a strong level of support or resistance, a strong level of confluence, that means that I have a moving average, I have VWAP, I have the Fibonacci lines, I have the breaking the day high or low, all in the same concentrated area
like it was,
at the top or bottom of the hour.
It faked it down and took it up.
Money in the bank. This time to make some money. Because when them things line up, there's momentum behind your trade. Think about it this way. If you was breaking a 200 moving average, that means 200 days of trading averaged in this one location, this one point in time, and it equals out 200 days. Right here is the greatest concentration of orders, along with the time frame at the same time. Then I said, well, wait, there's another element that's missing. What is that? The current market trading level. Where is the price right now in the market? And when that price is in that level at that time with that confluence, booyah, money in the bank. I take that trade all day long. And if you don't know that trade, you should write that down and practice it, because that right there will up your profit and loss big time. Your profit, not loss, because there is lose on that side. For the most part, you will end up with a higher degree of success in your trades. So TLP, remember that. Now, at the point that I have the things lined up, I have an objective point of view, meaning that I'm not wishing, I'm not praying, I'm not hoping, I'm not chanting about what the market is going to do. I'm very objective. I'm looking at the market. What is it presenting to me now? So when you put yourself in position and you're looking at what the market is presenting you now in the area of data, when you take that trade, you can be calm. Your palms don't have to be sweating. You don't have to be praying, you don't have to be chanting, you don't have to be hoping. You can just take the trade, relax,
right, guys,
see if it works out.
Great trading with you today, like always, and I'll see you guys tomorrow. We talked about trailing stops and so forth. If you did not see that, you should go back, because this is building on, each week is building on the last week's lesson, and therefore, so we're on lesson 10 here. So be sure you watch the whole series. I think it's going to help you out tremendously, because whenever you're taking a trade, you must take the trade objectively, and you must be acting in your own best interest. How do I deal with this market that never stops moving? Sometimes it's fast, sometimes it's slow, but how do I stay in position to be a winner? Let's go to the next one. Now, you're in a profitable trade. You need to decide when you've made enough money. Do you know that if you stay in the market too long, that trade that's running in your favor would eventually pull back, turn around, and take your gain from you? Thus important, not having a clear goal, a clear plan for your trade will allow you to be one of the victims of the market, where you up 10, 20, 30 points and then look around 2 minutes later because you passed the threshold where the market reversed on you rapidly and took all your gains back. In fact, not just took your gains, but then put you in the red where you have a loss. Have that ever happened to you before? Now, I don't know if it happened to you, but I know it has happened to me a whole lot of times. So till I got to the point where I know that I must have a clear objective when I take the trade, when I have made enough. So how do you do that, Coach Kelvin? Great question. Let me show you how. First thing you want to do is you want to have a daily profit goal. That means that before you approach the market, you know that each day you're looking to extract
so much money out of the market. Now, this is something I say now. You might follow me, you might not. But in the market, there's an endless supply of money that's available to you at any time. There's an endless supply of money that's available to you at any time. So therefore, do you get all the money? No. Wish you could, but you don't. But how about the part that's assigned to you? Because I believe that God bless me every day with a certain amount of increase. I believe that the wealth of the wicked is laid up for the just. I believe that every time I approach the market, there's money in that market for me. That's my mindset. So I never go in thinking, fearing, or scared. I go in and say, what opportunity God presents to me right now? So I have a clear goal on what I want to extract from the market every day. So that's there. Now, do I attain it every day? No. But I know when enough is enough. When the market is giving me all it's going to give, I'll take what it gives me and gain and call it a day. If you don't have a clear objective on your trading, a clear plan on your trading, a clear strategy on your trading, then therefore you're subject to the whims of the market, and you probably be losing more money than you're gaining, or giving more money back to the market than you should give back. So have a daily profit goal. Know when you had enough. Once you have attained that goal for that day, immediately, if you're in the trade and still running, I don't believe you have to close your trade out, but you can. But let's say my goal is $500 a day. When I hit $500 in the market positive in my trade, man, that stop immediately goes to $500. And if it stops me out, so be it. But the market will not get back that $500. That's mine. Now, if I don't do that, I can leave it alone and say, oh, it's going to run some more, try to get some more. That's a dangerous thing to do when you're trading. So have a clear goal. And when you hit your goal, stop trading. Or move your stop to lock in that profit and then let the trade run. They say cut your losers quick and let your winners run. Well, that is the place where you let it run, but you make sure that stop goes in and lock in that profit for yourself. Second thing I want to say is that I guess I just said it, move your protected stop to the profit goal, or lock in your gain, or close the trade. For a lot of you guys, you can't react fast enough to lock in the gain with the stops. Just close the trade. Sure, close the trade. Wait, Kelvin, you don't understand. This trade is running so strong. You tell me close the trade? Yeah. Let me ask you a question. Did you hit your goal? Yeah. Did it hit your target? Yeah. So what else is there for you? You've already decided what the market was going to give you. You already decided what's going to be enough for you today. So you can't let your mind shift because things take place there, and it is called greed. Don't let greed get the best of you. It leads to a lot of bad habits, and it will cause you more hurt than anything else. But if you can consistently hit your goal every day, do you know you're going to be in the 10% of traders that's profitable? 90% of retail traders are losing money? Come on, let that not be you. With a clear plan, a solid strategy, you can move into the market and take money out the market at will when you use the principles of TLP. Now, there are many people that allow greed to get the best of them. I want to really lay here for a minute. These people get caught up thinking that it's never enough. No matter how much money they made in a trade, they think it's never enough. If they made $500, they get upset when the trade runs and they think they could have got 1,000. So that starts up a negative feedback loop in your subconscious mind. It tells you, don't stop yourself out. Don't take the money out the market. Let it run. You're going to get another $500. You did yesterday. And that right there is a trading plan to disaster. That's a trading plan to disaster. They're in a trade, they make the $1,000 now, they say the market is looking so strong, I'm going to get another $500. Have this ever happened to you? You do that, the market take back the gain it gave you plus more. You set up a negative feedback in your loop in your mind to say that, well, my goal wasn't good enough, I need to do more. And when you hit your goal, hear this out. Reward your positive behavior with positive actions. That means that you're going to stop yourself out the trade. You're going to immediately move your stop to lock in the goal that you set for that day. And you're going to be satisfied with the results. Now, a greedy person will never be satisfied, no matter how much money they make in their trade. They will never have enough. Don't let that be you. Now, this is a warning to everybody that's trading. Don't let that be you. Now, here's the next one here. In the profitable trade, you need to decide when you made enough money. But with a winning trade, have a clear profit target for the trade. Clear. You know what it is. Have your daily profit goal in place. You know what your daily profit goal is. If you hit it, come close to it, you finish for the day. Once you obtain, stop trading for the day. Okay, let me say it one more time. Once you hit your profit goal, stop trading for the day. You know what that takes to stop trading in a market that's running? Discipline. You see, if you're not a disciplined trader, you're a trader that's subject to go by the whims of the wind. You're like a ship on the ocean without a rudder. Wherever the wind blows, that's where you're going to go. And you're going to find out that you're going to be sabotaging your trading plan over and over again. You're going to get so frustrated. You're going to lose so much money, and you're going to quit in the game, quit in the business. If you're coaching with me here at DTC Coaching, you have a strategy, you have a plan, you have an entry, exit plan, you have everything that you need to be profitable in the market, and only thing that you lack in is discipline. If you allow yourself to be disciplined, you will allow yourself to take unlimited wealth out of the market on demand. But as I say this often to you guys, how do you eat an elephant? One bite at a time. Don't try to make $1 million in one day. Let's make $1,500,000 at a time, $250 at a time, $1,000 at a time, and be satisfied with your gains. And anything that you get that's positive in your trading day, whether it be $1 or $10,000, thank God that for the blessing, for the increase. Be okay with what you have, because I pray. I'm a praying man now. I pray, Lord, give me each day my daily bread. So each day I wake up, I expect God to give me that what I need for the day. And that right there is the substance that makes me satisfied with that what God has given me. If I'm trying to get more and I'm greedy, I'm saying, God, you didn't do good enough. I want some more. And guess what happened? The devil come and take it from you. Now, I ain't trying to be religious, but that's my faith. And I stand by that. I am happy with what God give me, and I don't believe in giving it up easily. If you're at work and you're working all week long, you work 40, 60, 80 hours, and they give you your paycheck, I woke up to you and say, hey, Steve, give me your paycheck. You'll feel pretty strongly about me asking for your paycheck. In fact, you might want to swear a couple of times. You might come to you and say, do you know how hard I worked for this check? Oh, you'll be really, really upset about it because I'm asking you for it. Well, you feel the same way about your money. Now, there's a message I did a few weeks back about you and your view of money, your image. Why is it so easy for people to give the money back that they gain in the market each day? I have people making $5,000, $6,000, and they end up $5,000, $6,000 in a raid on the same day. That's a poor self-image about money and how money is made. Go watch that training. I think it's going to help you. I think it's going to help you. See, when you're in a place where you're in a profitable trade and you're not allowing yourself to take gain out of the market as it's going, you're acting in greed. I'm just calling it out. Don't shout me down because I'm talking to you. You're acting in greed, okay? Now, make sure you move your protective stop to lock in the profit of your trade or close the trade to get out of it. Make sure of that. Now, don't let greed get the best of you. Now, in a losing trade, you need to decide when you've had enough. When you've had enough. That means that you're in your strategy, you have an exit strategy. When a trade is not working out as you planned it to, you have to know when to exit that trade. That is called acting in your own best interest. The moment I know that that trade is not moving the direction or the speed where I want it to go to, I will cut the trade. I will get out of the trade. I will set me a resting order right where I think the trade is going to move at again, and then let it take me back into the trade for a second try. I'll try it 3 times on trade, and if it don't work out, then I'll just pass the trade up, because that means the market is not ready. You see, the market is going to do what the market's going to do no matter what you do. Sometimes we get in a little early, Sometimes we get a little late. We get caught in the pullback and so forth. Things like that happen to all of us traders, no matter how long you've been trading. But the thing I want to say is that when you take a trade, you have to know when you had enough, meaning that losing of your capital. If I'm putting on a trade, I know I'm risking $300 or $400 or $500. I'm okay with that. I've accepted the risk. I'm taking a trade, and I'm going to let the trade work itself out. But if I get in the trade instantly and the trade starts to move against me, I say, I am too early. Cut, I'm out. I expect that trade to go in the future 5, 6, 7, 8, 9 points before I get a pullback. But if I hit the button and it start pulling back early, I have to work on my entries. That's one of the reasons why you will always put a resting order in front of the trade so it can pull you in and you don't get caught in the pullback. Okay. Now, a person that's greedy, let me put the person up. I'm going to cover something. Have your exit planning strategy planned out before you enter the trade so you know where you will exit at. Are you expecting what the trade is expecting to do when you put on the trade? The second thing you do is to act in your own best interest. Exit the trade the moment you realize the trade is not going as planned. Okay, if I push the button and it starts going against me, that's the moment I know it's not going as planned. Oh, I'm out. I only lost 1 point, but I got a 15-point stop. But your stop is never meant to be hit. Your stop is just in case. It's an emergency parachute to jump out the plane because it's going down. Your stop is never meant to be hit. You're meant to stop yourself out at the moment of trouble. Now, you hear that out? Now, I'm not saying that you have to micromanage your trade, but if I initially push the button right now and that trade pulls back and going back 5, 6 points, I know that trade I got in too early. That moment I realize it, I see it, I process it, and I put the hand on the button, I'm stopping myself out. I would be willing to go back in. I call it a probe, okay? But when I push the button, I'm expecting that trade to go in the direction of my favor far before I get ready to get stopped out. That's me. Now, if the trade is working, if it went up and is pulling back a little bit, I'll let that happen because the momentum is there. Sometimes it's satisfying, liquidating some sell orders or stops or things of that nature. And it does that because the trade never goes up or down directly. It goes in a zigzag motion. So I understand that process, but I am never expecting a trade to immediately go in the opposite direction or push the button. If that's happening to you often, your fundamentals is wrong. You got to look at how you enter your trades, and we can work on that if you're coaching with me. Okay, don't let greed get the best of you guys. There are people that will take a trade because for fear of being wrong, they will sit back and let the trade go against them 5, 6, 7, 8, 10, 12, 13, 14 points before they ever decide to exit because they say, oh, I think it's going to turn around. That's greed, guys. That's greed. Don't let that happen to you. That is a very dangerous characteristic for any trader to have. Make sure you always acting in your own best interest. Don't let greed get the best of you. See, a greedy person does not want the trade a losing trade. They will hold on to it and end up melting down their account because you only could take so many huge drawdowns in your trading career before it blow your account up. And if you're doing the proper counts, you blowing the counts up right and left because you're not acting in your own best interest. Pay the commission, get out the trade, and try it again. It's okay to probe the trade. When you find it's going wrong, act in your own best interest, get out. Don't allow FOMO to take over, fear of missing out. Well, if I stop myself out, the trade going to run off. Well, let it run off. Wait for another opportunity to get into the trade. This is how you deal with the market, guys. Hear me out. There's always going to be an opportunity to trade. You're never going to run out of opportunities to trade. So don't let fear of missing out take over your conscious mind, forcing you to do things that is not in your best interest. The people that agree, that's not sure, they will try to convince themselves the trade is going to turn around. How many times? Now, that happened to me. Real story, man. I had a trade I took on. I took a 2-week contract on Crowd. Soon as I got in the trade, that thing dropped. I mean, I'm talking about 30 points, dude. I had $5,000 in the trade. And when it dropped, I was like, whoa. And I had a 2-week contract. So I said, whoa, okay, it's Monday. I got 2 weeks. It's going to turn around. So I put my stuff way back here. And that thing kept falling and falling and falling. 50% of my money was gone. I said, it's going to turn around. It's got to turn around. I got a whole nother week. Do you know I waited 2 weeks? That thing ran. It kept going short, kept going short. Fear of missing out. Fear of being wrong. All them things were going on there. That contract ended worthless. All I had to do was be objective, cut the trade, turn around and go short, and I would have made money. I'd have made money for 2 weeks, but I lost money for 2 weeks because I needed to be right. That's pride, guys. That's ego. Don't let your ego cause you to blow your account. You don't have ego here. You're objective. What the market presented to you, take it, get out the trade if it's causing you harm. Act in your own best interest. Greedy person will experience excessive loss, and I hear it in the Discord every day. People losing thousands of dollars. That is not okay. On no time frame, that is not okay. It's dangerous, guys. It's dangerous. Don't allow that to be to you. We're talking about how to deal with the market. Always act in your own best interest. Always plan your trades. Always take profit. Always get out the trade when it's not operating in your favor. Your job is to take money out of the market, not to give money to the market. Now, how much is enough? Here, I'm going to deal with the situation here now. Ask yourself, how much is enough when you're trading? You should know that from your annual plan for your trading strategy, your weekly, your monthly goal, your daily goal, your market goal for the day, whatever that time frame is, you should know how much is enough. And when that enough presents itself to you, you extract it from the market and you stop. Now, here's the problem. There's a lot of people that's trading today, and nobody in this room, of course, that's trading today. They have a mission to be in the market because they have a need. You should never go in the market because you need to pay a bill. You need something. You're in the market as a business. You're in there as an investor. You're in there to get money out of the market, but never as a need, because it will contaminate your judgment. It will contaminate your objectivity. It will contaminate your stock management. It will contaminate your taking profit. All these things will be going against you when you're trying to make an intelligent trade. So ask yourself these questions. What or why I need the money? You see, the market don't care you have $4,200 in your account. It don't care you have to pay your light bill. It don't care you trying to save money for a vacation. It don't care at all. So don't get caught up in this situation where you go in the market because I need money. No, you go in the money as a business and an investor to make money, but not that you need it. And then we'll cover a little bit more as we go along. Ask yourself the question, can I really afford to lose this money? How confident am I in my ability to trade? These are real questions, guys. Real questions. How important is this money to me? If the answer is wrong for any one of the four questions, I need you to step back. If you need the money, then use that money for what you need it for. Don't invest it in the market. If you can't afford to lose the money, then don't you put that money in the market. If you're not confident in your ability to take a trade and be profitable, you should be doing sim trading or working with someone to help you improve your skill set. How important is this money to me? Now, if it's so important that life or death, or you being put on the street, or you not eating today, it's very, very important. So any of these issues, these four issues right here, will contaminate your opinion and your observation of the market when it comes to trading. It's a very, very dangerous place to be. And I do not want that to happen to any of us. We have to be in a position where if I throw the money in the air and it don't come back, I'm going to be okay. I'm going to be able to eat tomorrow. I'm going to be able to take care of my family tomorrow. I'm going to be able to drive my car tomorrow, be able to pay my light bill. You got me, right? You can't be in a needy, because a needy perspective puts you in a scarcity mode, and it causes you to do things that is not beneficial to your trading or your trading style. So if you're in that position, you want to trade, then you might want to think about a funded account, a prop account. then you're using other people's money. But there's a cost base to that. If you can't invest in that, then we need to figure out another way to get you into the trading market. Because there's many ways to get in and make money. But the highest thing I would say that once you figure out you want to trade is your ability to be trained and know how to trade. Okay? So make sure, guys, that you don't contaminate your thinking because you have a need. Make sure you come in the market objective, to be able to put things forward and make good decisions when it comes to taking trade or putting money in the market or take money out of the market. Because remember, guys, the market don't care about you, doesn't care about your needs. It just is there, it's moving, and it will take everything from you if you don't have a strategy, a plan, or skills to trade the market. So everybody that's took up coaching, I think you did a great thing, and I believe that it's going to make a difference in your trading career. We're going to be winding up here in Charlotte. So the only trade with the money you can afford to lose. If you can't afford to lose the money, don't trade. Find something else to do. Because in trading, it does involve risk, and it involves money that's going to be even taken from you or going to multiply because you use the right decision to get in the market. So the question is, how much is enough? I think we duplicate this here. Okay. All right, that's a duplicate slide there. All right. That right there duplicated the slide. I thought I had my other slide to show up. So let's go from here. So this is what I want to give you guys. A successful trader will only trade with money they can afford to lose. They will always put themselves in the best possible position when they're taking a trade. They will never take a trade that's not acting in their own best interest. They don't allow themselves to be distracted while trading. That means that they own the video game, the phone ringing, they're driving, they're doing different things like that. But it's anything that's outside of the 100% focus on your trading is contaminating your outlook on the market. Okay? When you don't have these distractions, these things coming against you, need and so forth of that nature, it's much easier for you to deal with the complexities of the market. Now, if you're trading and you're trading with your money, make sure that you have a clear plan and a clear strategy on how to get in and out of trades. I'll be wrapping up right here. Again, this is for you guys at the end of the series. It's going to include the training. The 20-day challenge. This is a great way to train yourself. I want you to put together a 20-day challenge to make $250 a day or more, but $250 a day for 20 straight days in a row. Once you hit the $250, I want you to stop trading. The reason I'm doing this here is that I want you to develop new habits. It takes 21 days to put on a new habit. If you can restrain yourself from getting back in the running market and you made $250 and the market look is presenting to you $20,000 and you say, I will not trade because I have a discipline, I have a plan, I have a goal, I met my goal, I'm not going to trade no more. And we know $250 is real easy to make in any market, especially if you're trading NQ or ES in the futures market. Okay, so make sure that you never trade more than 5 trades a day. Make sure you never have a drawdown bigger than $500 a day. If you have 3 losing trades at any given time, you stop trading. Consecutive losing trades, stop trading. If you hit your mark or come close to your mark, stop trading. Okay, you got the drawdown, you have your maximum number of trades, you have your trading rules in place, you know when to get in and out of trades, TLP. So therefore, I expect that you guys can be green for 20 days in a row. Now, you may not be green on some days, but your weeks will be green and you will hit your target. Some days you're going to make 250, some days you're going to make double or triple that. But your goal is 250. You don't have to close out the trade. Just put your stop to lock in the $250 and let the trade run. If you have a loser, cut your losers quick and let your winners run. Now, here it is again, the hierarchy of a pro trader. Patience, emotions, psychologically, meaning that you're not distracted. Psychologically, you did your study. Psychologically, you don't have bad programming running. And we're talking about this 20-day trading strategy is to change your mindset. You're disciplined. You wait for your best setup. If your edge is not there, you're not going to trade. You don't have emotions in your trade. You don't have FOMO in your trade. You don't have revenge in your trading. You trade methodically. You get in, you get out. You're very objective. You have a cold mindset. and you have correct expectations what the market is willing to give. And you take what the market is willing to give and you relieve yourself from there. That's going to conclude this teaching. If you want to know anything about DTC coaching, you can always go to the website, dominantcoaching.com, and you can find more information about our coaching program. I'm Coach Kelvin. I will speak with you guys later. God bless you.